Welcome to today's deep dive. When you picture the artificial intelligence boom, it's so easy to just focus entirely on the software side of things.
Right, or the huge data centers.
Exactly. Those massive, almost magical data centers. We imagine these billion-dollar silicon brains powering, natural language models, autonomous driving, medical research.
All the really flashy consumer-facing stuff.
Yeah. But there is this glaring, purely physical problem that rarely gets discussed. Because before one of these unbelievably complex, incredibly expensive chips is ever shipped off to a server rack, how do the tech giants actually guarantee that it works?
Oh, you certainly cannot plug a $10,000 piece of silicon into a data center, power it up, and just cross your fingers.
Right, hoping you didn't miss a microscopic flaw.
Exactly.
No.
Because a single faulty logic gate on a chip containing, say, 80 billion transistors could bring down an entire system.
And that invisible checkpoint is exactly what we are analyzing today. We are looking at the recently released Q4 FY 2025 financial earnings and dialogue script for Advantest, which trades under the Tokyo ticker 6857.
Yeah, these numbers were just reported on April 27, 2026.
And our mission for you today is to uncover this company functioning as the primary toll booth of the AI revolution. We are going to dissect Advantest's staggering growth.
And along the way, we're going to get a masterclass in how the stock market actually prices cyclical tech companies.
Yes, because the relationship between a company's fundamental performance and its valuation is deeply, deeply counterintuitive. Okay, let's unpack this.
Sounds good.
Before looking at the explosive Q4 numbers, we really need to establish what Advantest actually does. Because testing these advanced AI chips is not, like checking a light bulb to see if the filament glows.
No, it's vastly more complicated than a pass-fail electrical test.
I think of it like designing a rigorous, bespoke, standardized test for a child prodigy. You can't just assume the student is a genius. You have to run them through a custom-built, agonizingly complex series of intellectual hurdles before they graduate from the fabrication plant.
I like that. To take that analogy into the physical realm, Advantest builds automated test equipment, or what they call testers. They are the global #1 in this space.
So they are building the machines that test the machines.
Basically, yeah. They produce systems for logic chips like CPUs and GPUs, which they call system-on-a-chip or SoC testers, and also for memory chips. Their flagship product is this massive platform called the V93000.
The V93000, okay.
And testing a prodigy-level AI chip mechanically is just staggering. You are placing a really delicate piece of silicon onto a testing board and using thousands of microscopic pins to make physical contact with tiny pads on the chip.
Thousands of pins on a single chip.
Exactly.
Yeah.
And then the V93000 fires highly synchronized electrical signals into the chip's logic gates, literally millions of times per second. It is looking for the exact correct voltage response from every single pathway.
Wow. Millions of times a second.
Right. And if one path is too slow or returns the wrong voltage, the chip fails.
Which means the test program has to be perfectly aligned with the architecture of that specific chip. You have to know the chip inside and out just to write the test for it.
Absolutely. That physical complexity is really the foundation of their entire business model. Because the test programs are highly device-specific, it takes a foundry 12 to 18 months of qualification time just to set up the testing parameters for a single chip design.
Wait, a year and a half just to configure the test?
Yeah, 12 to 18 months.
The switching costs there must be astronomical. I mean, once a massive manufacturer, say, TSMC, for example, spends 18 months qualifying a flagship AI chip on Advantest's V93000 platform, ripping out that infrastructure to switch to a competitor would just completely derail their production timeline.
It creates a multi-decade moat. That lock-in effect explains why Advantest commands a massive 66% market share in silicon testers.
66%?
Yeah, and that's actually up 10 points year over year. Meanwhile, their main rival, Teradyne, is sitting at roughly 28%. So Advantest essentially owns the testing standard for the entire AI accelerator market.
But looking at the geographic revenue breakdown in the sources, there is this really interesting quirk. A massive 58% of Advantest's Q4 revenue mix comes from Taiwan.
Right.
But the chip designers, the big hyperscalers and GPU architects, they are mostly based in the United States. So why is the revenue so concentrated on an island in East Asia?
Well, the physical reality of the semiconductor supply chain separates the design from the actual manufacturing. Those major U.S. tech companies operate under what's called a fabless model.
Meaning they don't have their own fabs.
Exactly. They design the architecture of the chip, but they don't actually own the fabrication plants to build them. They outsource the physical manufacturing to foundries, primarily in Taiwan, and to facilities known as OSATs, which stands for Outsourced Semiconductor Assembly and Test.
Ah, okay, so the assembly and test is all outsourced over there.
Right. When a fabless U.S. company needs to guarantee the quality of their high-performance computing chips, that final critical testing phase happens physically in Taiwan. Advantest sells the massive V93,000 machines directly to those Taiwanese facilities to test the U.S.-designed chips.
Oh, I see. So the U.S. tech giants dictate the terms. They essentially tell their Taiwanese manufacturing partners, hey, use the Advantest machines to validate the chips before shipping them back across the Pacific.
Precisely.
So they are the ultimate toll booth that every premium AI chip has to pass through. And given the current AI supercycle, the numbers reflect that. Advantest posted Q4 revenue of 328 billion yen. That is up 41% year over year.
Huge growth.
Yeah, and their operating margin hit 46.7% and operating profit was up 139%. But I am looking at their forward capacity targets here, and I have to push back a little bit.
Okay, what's standing out to you?
Management previously planned to build 5,000 SOSA systems a year. They have now doubled that target to 10,000 systems a year by calendar year 2028 or 2029.
They get it.
Are they just like projecting current hype linearly into the future? 10,000 complex systems sounds like they are assuming data centers will simply buy AI chips at an accelerating rate forever without hitting a ceiling.
It's a fair question. The concern about overbuilding into a bubble is pretty standard for cyclical hardware companies. But management's framework operates on a 2 to 3 year horizon because spinning up manufacturing for these massive testers requires immense lead time.
So they can't just flip a switch when orders come in.
Exactly. They explicitly noted that the 10,000 system target incorporates a strategic buffer. It is a capacity ceiling. It's not an immediate sales guarantee.
Got it.
They are building the capability to produce that many, because their internal modeling shows a massive demand trajectory shifting from the current phase of the AI rollout to the next phase.
The current phase being this massive infrastructure build-out to train large language models. A lot of those models are already built, or at least the initial hardware is largely in place. So what is the catalyst for the second wave?
The next major leg of demand revolves around agentic AI and the transition to inferencing workloads. During the earnings call, management specifically called out CPU testing as the next major growth vector.
Let's break down agentic AI because that term gets thrown around a lot. How does that change the physical computing requirements compared to what we are doing right now?
So currently, most AI is reactive. You type a prompt, it generates text or an image based on its training, and then it just stops.
Right, it waits for you to ask the next thing.
Exactly. Agentic AI refers to artificial intelligence acting as an autonomous agent. Instead of just answering a question, it is given a goal.
Like, book me the best flight to Tokyo for under $1,000.
That's a perfect example. The AI has to break that goal down, open a web browser, read prices, synthesize the schedule, and execute the transaction all on its own. This requires continuous background computing power.
Oh, wow. So it's constantly running.
Right. This active deployment phase is called inferencing. Market research indicates that inferencing compute will be orders of magnitude larger than training compute. It involves complex pre- and post-processing and relies really heavily on CPUs working alongside the AI accelerators.
Okay, so training the model happens once, or maybe periodically in huge batches. But inferencing happens every single time any user anywhere in the world asks their AI assistant to do something.
Exactly.
The sheer volume of chips required to handle that constant global activity scales exponentially.
The volume scales, and the technology itself changes too. Advantest is also positioning itself for entirely new testing paradigms. For instance, they just received their first volume order for silicon photonics in Q4.
Silicon photonics, what is that exactly?
It's a technology that uses light, rather than traditional electrical signals, to transfer data within and between chips. It is becoming necessary just to handle the immense bandwidth demands of AI data centers.
Using light instead of electricity, that sounds incredibly hard to test.
It is. The total addressable market for testing optical components is largely undefined right now, but Advantest expects this specific market to double in calendar year 2026 and then double again in 2027.
So we have explosive demand driven by agentic AI, brand new optical technologies coming online, and a capacity runway targeting the end of the decade. Naturally, you would assume their profit margins are poised to skyrocket alongside revenue.
You would think so.
But their FY 2026 guidance tells a very different story. So what does this all mean? The FY 2026 guidance projects 1,420 billion yen in revenue, representing 26% growth. They are also forecasting a heavier mix of their highly profitable SoC systems.
Right, the premium products.
Yeah, and usually selling more of your premium product expands your profit margin. Why is their operating margin guided to stay perfectly flat at 44.2%?
That flat margin guidance really forms the core of the bear case against the stock right now. Evaluating the quality of those earnings requires looking closely at four specific headwinds management identified.
Okay, let's go through them.
The first is that the fourth quarter of FY25 featured an artificially ideal product mix. Sales of their SoC testers and their high-margin licensing income peaked simultaneously. Modeling that perfect alignment to repeat every single quarter is just unrealistic.
A perfect storm of high-margin revenue that you just can't baseline going forward.
Exactly. The second headwind is bill of materials, or BOM, inflation. This simply means the raw components, metals, and subassemblies required to physically build a V93000 tester are getting more expensive.
Inflation hitting the physical supply chain.
Right. Third, there is a distinct irony in their supply chain. To build memory testers, Advantest requires large amounts of high-performance memory semiconductors themselves.
Oh, the global market for high-bandwidth memory is totally supply-constrained right now.
Exactly. Advantest is facing the exact same bottlenecks and cost increases as their customers when buying memory chips to put inside the machines that test memory chips.
So the company building the test machines can't get enough chips to finish the test machines. That really highlights how tight the entire semiconductor ecosystem is right now.
It does. And the fourth headwind is a deliberate strategic choice. They are initiating a massive step up in reinvestment to fund that 10,000 system capacity expansion we talked about.
So they're spending heavily now to prepare for the future.
Yes. Research and development spending is jumping by 28% to 100 billion yen, and capital expenditure, the money spent on physical infrastructure, is rising 31% to 45 billion yen. They are intentionally suppressing their near-term profit margins to capture the agentic AI wave.
Got it. So the flat margin isn't a structural flaw. It's a combination of raw material inflation, supply chain irony, and heavy reinvestment. But looking closely at the quality of earnings, the headline numbers for Q4 show net income up 217%.
A massive jump.
On the surface, it looks like they are just printing cash. However, a deeper look at the financial data reveals an accounting mechanism inflating that figure.
Right. That 217% net income growth includes a 17.3 billion yen one-off financial gain from a call option exercise.
A call option?
Yeah, Advantest acquired shares in another entity back in January 2025 as a strategic investment. A call option gives them the right to buy shares at a predetermined price. When the value of those shares goes up, the value of the option goes up.
Naturally.
Accounting rules require companies to log that increased value as financial income on their income statement, even if they haven't sold the asset and collected the cash. It's a paper gain that flows straight to the bottom line.
Oh, I see. So it inflates the headline profitability without actually adding cash to the bank account for daily operations.
Exactly.
Though, to be fair, if you strip out that 17.3 billion yen anomaly, their underlying net income growth was still north of 170%. So the core business is still remarkably strong.
Absolutely.
Yet they're not operating a vacuum. Teradyne, their primary rival, pushed back hard in the memory space this past quarter. The data shows Advantest's memory tester share dropped 2 points down to 61%.
Right. Customer dual sourcing is a permanent risk in this industry. When massive tech companies place orders for testing equipment, they rarely want to be entirely dependent on a single supplier.
Because if an earthquake hits a manufacturing plant or a geopolitical event disrupts shipping, being single-sourced is a catastrophic vulnerability.
Exactly. They split their orders dual sourcing to ensure supply chain resilience. Teradyne is a formidable competitor, and clawing back 2 points in the memory tester market proves they are actively defending their territory.
Okay, let's transition from the physics of silicon to the physics of Wall Street. We have a company posting booming historical numbers, projecting massive future capacity for agentic AI, but navigating near-term margin constraints and fierce competition.
That's a lot of competing variables.
It is. How the stock market digests and prices this competing information is the most valuable lesson in this analysis. Here's where it gets really interesting. I want to frame the stock market's behavior with a surfing analogy.
Okay, let's hear it.
In the tech sector, analysts use a metric called the R40, which basically adds a company's year-over-year revenue growth percentage to its operating margin percentage. It is a gauge of fundamental health.
Right, the rule of 40.
Exactly. I think of the R40 like measuring the height and power of a wave after it has already crashed onto the beach. It tells you the exact physical dimensions of what just happened.
Okay.
The stock valuation, multiply uncertain. The price to earnings, or PE ratio, is the surfer sitting out in the deep ocean. The surfer is paddling and positioning themselves, anticipating the swell long before the wave ever becomes visible.
I love that. And Advantest serves as arguably the cleanest case study for understanding how cyclical technology stocks are priced. The stock went parabolic, rising 25 times over 6 years on a split-adjusted basis.
Up 25 times. Wow.
But the stock price didn't move concurrently with the fundamental earnings. The golden rule of the semiconductor cycle is that the PE valuation multiple changes direction 3 to 4 quarters before the fundamentals, meaning the R40 metric, actually change direction.
Walk through that timeline for me, because looking at the historical data, the sequence of events feels completely inverted compared to how casual observers assume the stock market functions.
It really does. Let's examine the peak of market expectations. Advantest's PE multiple peaked at an astronomical 80 times forward earnings in the fourth quarter of FY23, which was March 2024.
80 times earnings. That's incredibly expensive.
Right, but at that exact moment, their fundamental R40 metric was actually falling. The company's earnings were declining from the previous hardware cycle.
So the business's actual revenue and profit metrics were deteriorating, yet the stock was trading at its absolute most expensive premium.
Exactly. The market, playing the role of your surfer, saw the AI infrastructure wave forming. Institutional investors were anticipating the supercycle before it ever manifested on Advantest's balance sheet.
And then what happened?
What followed is a phenomenon known as mid-cycle compression. Over the next 4 quarters, from Q4 FY23 to Q4 FY24, the AI orders actually materialized. Advantest's R40 fundamental gauge rocketed from 15% all the way up to 108%.
So the business was booming in reality.
Yes. But during that exact same 12-month period, the PE multiple collapsed. It fell from 80 times earnings down to 29 times earnings.
Wait, the company's actual performance improved massively. Sales and margins went through the roof, and the stock's valuation multiple shrank by over 60%. Elaborate on the math behind that compression.
It comes down to the denominator in the price-to-earnings ratio. The market was willing to pay a massive premium at 80 times earnings because they knew a massive wave of profits was coming.
Right.
When those profits actually arrived, the earnings portion of that ratio expanded dramatically. If the stock price stays roughly the same, but the earnings double or triple, the multiple naturally shrinks.
The anticipation phase ended, and the reality phase began.
Exactly. The earnings simply caught up to the expectations.
Which means an investor who waited for the company's fundamentals to look flawless, someone who waited for the R40 to bottom out and start climbing before buying the stock, they completely missed the valuation trough.
They would have missed the optimal entry point by 3 full quarters.
That is wild.
Conversely, an investor who waited for the fundamentals to roll over and decline before selling would have missed the peak valuation multiple by 5 quarters. The R40 metric is purely descriptive. The PE and price-to-book multiples are the predictive lens. They represent the collective assumption of what will happen next.
Which brings us to Advantest's current state. The stock is currently trading at a 46x forward PE.
It is sitting in a mid-cycle state.
Right.
A 46x multiple is higher than the recent trough of 29x, but it's nowhere near the speculative peak of 80x. Crucially, their R40 fundamental gauge has already peaked.
It did.
Yeah, it hit 137% in the first quarter of FY25, rolled over, and is now decelerating.
But the fundamentals decelerating doesn't trigger a market panic because the multiple indicates the market already knows it is mid-cycle.
Exactly. The 46x multiple tells us the market has priced in a normalization phase. The extreme, unprecedented acceleration of the initial AI tester build-out is over. The company is now transitioning into a steady, massive, multi-year expansion, slowly marching toward that 10,000 system capacity.
We began today looking at Advantest as a traditional tech stock, ticker 6857. But you can now view it as the ultimate invisible toll booth for the AI revolution.
It really is.
Every major advancement in silicon architecture, from training accelerators to agentic AI CPUs to silicon photonics, has to physically pass through their testing machines.
Without them, the ecosystem just stalls.
Furthermore, you have a highly sophisticated framework for reading cyclical tech stocks now. You know not to wait for the fundamental earnings to hit the bottom or peak before making a move. You have to watch the multiple.
Because the multiple is the surfer anticipating the wave.
Exactly. Understanding that mechanism protects you from buying or selling at the worst possible moment in a hype cycle.
It fundamentally changes how you process financial news. You stop reacting to yesterday's weather report and start looking at the barometer.
I couldn't agree more. As we wrap up today's deep dive, I want to leave you with a thought that builds on the sheer scale of the future we just discussed. We explored how agentic AI inference is going to demand exponential compute power and how these chips are becoming unimaginably complex to validate.
Yeah.
Advantest is currently the master of the test. But consider what happens when the AI chips themselves become so incredibly advanced, so capable of autonomous reasoning, that they begin designing their own testing parameters.
Oh, wow. That's a huge thought.
At a certain threshold of complexity, human engineers won't be able to map the logic gates or write the validation software fast enough. When the artificial intelligence itself is tasked with figuring out how to validate the next generation of artificial intelligence, well, who holds the real power in the semiconductor food chain? Is it the chip maker fabricating the silicon, or is it the intelligence writing the test?
That really blurs the line between the product being manufactured and the quality assurance process entirely.
It is a profound shift to consider as this supercycle continues to unfold. Keep questioning, keep exploring, and we'll catch you on the next deep dive.